How big a tick in the box kind of down that road are we, given the CPI data that we got yesterday?
Well, I certainly think we're going to need, they are going to need more data than just the one more set of prints we'll get before the July meeting, which I believe is July 31st. And since there's no meeting in August, I think the soonest practical time to even think about a possible rate cut would be the September meeting. And then my own judgment is a lot would have to go right between then. You know, we'll get numbers for June and July and CPI for August. And so if you had 3 more numbers like what we got yesterday, then September could be possible.
The Fed has a dual mandate. Is the focus on inflation? Is the balance kind of 60-40 inflation versus what's happening with the labor market? How do you think the kind of the mix of inputs they're thinking about works right now?
That's a great question, because I actually think it's quite important in this cycle. I think it was clear back in 2022 and 3 that when inflation was too darn high, they were, in essence, a single mandate central bank. Even Chair Powell even acknowledged at Jackson Hole in 2022 that raising rates could cause some pain. We haven't seen that. It's been a very, very rapid and so far painless disinflation. And you got a question yesterday about whether or not they would cut rates preemptively because they were forecasting a softening economy and a rise in the unemployment rate. And he didn't commit to doing that. He said they want to try to avoid that. On the other hand, they also want to avoid a situation where they declare mission accomplished and then have to be hiking rates next year because inflation rebounds. And so my guess is that on net, they're going to really need to see some tangible evidence of economic slowing before they would actually cut, absent some better news on inflation.